So yeah, and then there are so many areas that you could go to the bank, book an appointment to help start or grow your business, whether it's like a brand new or existing business. For example, renovation, like we usually call it leasehold improvement from the bank. Doesn't matter if you already have your business, like I mentioned. If you're just starting and you're signing your lease, but then based on your business needs, that office space might not look exactly what you need and you need to do some renovation. We're happy to support that as well. You can also reach out to us for purchasing new equipment, expense your office space, or purchase commercial space. Either it's for your own use, or you just buying it for a rental as an income producing real estate property, or simply to increase your inventory, increase your sales, purchase or establish a franchise if that's what you would like to do, or you can completely establish your own business or purchasing an existing one if you find a very good deal, someone is selling you, for example, like a standalone restaurant or something like that, and you don't want to build your own because you don't want to write your own cuisine or your own menu, things like that. You just want to completely buy it out. We are able to support that as well. Later on, I will share with you what kind of loan program that we have to support that. Crystal, you can move on to the next. Thank you so much. Yeah, so there are two types of financing, two general category that the bank we're offering. One is for short-term financing. The other one is for long-term. So in order to fund your short-term needs, you'll just need a short-term financing solution. Ideally, short-term financing solution, short-term debts would take you about less than 1 year to pay back. So things, for example, like things like about the short-term financing is like, for example, you need some cash to pay your suppliers. You need some short-term cash to increase your inventory for the time being before free up some more cash or collect some of that from your customers. Or either you are short for payroll this month or next month that you just need the bank's financing for that, or you're just managing your expenses and then cash flow, buying office supplies and things like that. You could definitely get the short-term financing from us. The example of the solutions of these short-term financing include business operating line of credit, is a good one, and then business credit cards or business overdraft protection. Now, for business operating line of credit, usually we get a lot of business clients ask us, even with a startup company. Please know that if it's a startup company, because you don't have an established sales, you don't have any account receivable yet, even though you in need of buying inventory, it's not likely that the bank is going to grant you a very large line of credit to start with. Usually we, for a startup business, the maximum of, we call this 3 types together is opening credit, so revolving credit. So normally we don't grant more than 25,000 combined together. You can split it up to, for example, having $10,000 overdraft protection in your checkings account and then 15,000 credit cards to start with. And this is actually a really good combination to start with, because when you first start, even though you have calculated your cash flow needs, but sometimes on a one-off, you might have to pay this rent, you might have to pay extra employee for training or something like that. Then overnight, you just realize, oh my goodness, I don't have enough cash. So you want to protect your reputation and you want to protect your credit risk as well. So having that $10,000 overdraft protection is very useful. Most of the business owner find. And then for that $15,000 credit cards, what you can do is that you could, split it up to your employees, or you can have one single card that's large enough to allow you to buy some of the office supplies, some of the inventories, while leveraging your days payable. Because for credit cards, you have 21 days interest-free as long as you pay. Then within the time before the due date, then you don't have to pay interest. And then on some situation, if you feel like, okay, $10,000 overdraft is not enough, you could actually go for like $15,000 line of credit or something like that. So in RBC, I'm not sure about other bank. I used to work at TD as well. TD is the same thing. So we call overdraft protection and operating line of credit interchangeably. It's just overdraft protection, the maximum limit is 10,000, and operating line of credit is anything above that. So we call it, they both attach to the same checking account. So whenever your checking account does not have enough funds, it will pull from the line of credit or pull from the overdraft protection automatically. However, these two facilities does work a little bit different in terms of their fees, in terms of their schedules, in terms of the annual review, things. And so there is a bunch of detail when you go through the application, and we usually advise you. But normally when you first start off, I would just say overdraft protection is enough. It's cheaper. There's no annual review fee for that. And 10,000, I believe most of the scenario is just it is enough a limit to start. Now, once your business, what I say, start a business is anything less than 2 years. So if your business more mature, so over 2 years, you have 2 full years of financial statements, then we could go for a larger operating line of credit to support your business and support your growth and expansion. Ideally, we support 10% of your revenue, the past year's revenue, or 75 up to 75% of your account receivable plus 50% of your inventory. Because sometimes over time, there might be some account receivable that you accumulated from your book that you have not collected yet. We call it an aged account receivable, like usually it's like 90 days. And then your inventory, you might need some more funding to support, to buy more inventory or stock up based on whatever scenario. Then we could 75% account receivable plus 50% inventory, or 10% sales. Sometimes depends on each of the application, we can stretch a little bit more. Yeah. So this is what I have for short-term financing. You can go towards the long-term financing now. So the long-term financing, so by the word, is that the debts then can take you anywhere between 1 to 25 years to repay. So I put the 25-year out there because if you are buying a real estate property, you're not going to likely to like pay it off within 10 or 15 years, and you want to stretch it to 25 to lower the payment. So I put it out there. But usually for equipment, it's anywhere from 1 year to 7 years of amortization. For leasehold improvement, renovation, it depends on your lease, actually. So if you are signing a lease, let's say that you only sign for 3 years, but the landlord gives you another option to renew for another 3. So your maximum amortization for that one, it will be 6 years. So example of some of the long-term financing is, for example, you're buying additional vehicles, brand new or old, we could finance up to, if you're an existing business, which is more than 2 years, we can finance up to 75%. But if you're utilizing later on the second option, Canadian Small Business Financing Loan, I'm going to go over, your loan to value could go up a little bit more. I'll go over on that. And then another example will be upgrading office equipment. You're building and then you're building needs renovation, things like that. And then you purchase real estate. All these can be financed either via a term loan or a Canadian Small Business Financing Loan. Usually for term loan, we pay over the useful life of the assets through a regular payment schedule, allowing you to free up cash for day-to-day business operation. Some of the owners, they prefer to, they sometimes use cash, especially when your business has been for a while now, you establish a lot of cash and save up a lot of cash in your business. They prefer to finance it with their own cash, like pay with their own cash. However, there are definitely, like pros and cons of using your own fund and then borrowing the bank's money. A lot of people think, oh, I have to provide the documents, I have to pay the interest. But that's also, one of the business, how you can grow your asset and grow your business more is by leveraging what the bank can offer you. Why pay your own cash in there and risk everything that you have? Why not let the bank take a little bit risk for you, right? So when you borrow that, you offload a little bit of those business risks onto the bank. So, and then for long-term financing, because you're going to have the assets over for so many years anyway, and your accountant will tell you that, okay, we're going to amortize it. There's some amortization element on your financial statement and things like that. It's definitely like we always encourage the owners to talk to their accountants, seek their advice, whether it makes sense for them to use their own cash or do the financing from the bank. Now, if you do financing from the bank, so the first option is term loan, like I mentioned earlier. So for vehicle, for equipment, things like that, we could amortize it up to 7 years. And ideally, we can lend up to 75% on a term loan option. For Canadian small business financing loan, is actually a very good program for startup business. If you go to a lot of banks, I don't know about other ones, and then for what I know is at TD, I don't think that they have this program, or either they're not very strong in the program. RBC is one of the few financial institutions that partner with the government to help the small business owners to, with their startups, to help them to start their business. This one is a government guarantee program. So the government actually guarantee for 85%. So the bank only need to see like 15% guarantee from you. And then the maximum for this program is $350,000 for leasehold improvement and equipment. But if you're buying a real estate, which is buying office space or something like that, or a rental, you can borrow up to $1 million under this program. And this program does have like a 2% government guarantee fee because they're guaranteed the loan for you. So that is somewhat easier for you to obtain. Like I mentioned, most of the bank will turn you down if they know that this is a startup or your business is still less than 2 years and don't have full financial statement. They will tell you straight that, oh, how much do you want to borrow? Anything more than $50,000, unfortunately, we cannot do it. But for this Canadian small business financing loan, it's easier. It does come with there's some condition though. So for this program, is good. You still need have enough startup funds. So we require the owners to be able to service 25% personal guarantee for that, but that does not mean it's cash. We need to be able to. We need to see that you have at least that much. If you need to borrow 100,000, for example, we need to see that you have at least 25,000 worth of assets in either investment, your bank account, or your your equity, your home equity. If you own a home, very easily you'll have 25,000 for sure. And then the other requirement for this one is you need to have your business projection for sure. Later on, I'll mention that under the document checklist. You need to have a business plan, a good business plan. And based on your projected financials, we also need to see that you have at least 3 months of cash flow with your own cash, besides your down payment. Now, the down payment is one thing, and this program can help you to finance for up to 100% leasehold improvement, which is renovation, and then up to 90% of equipment combined together. But it does subject to a maximum loan to value, which, for example, if you're buying a restaurant or starting a restaurant, we can only lend up to 67%. So the down payment from you for a requirement is 33% for that. So all this kind of program detail, your bank account manager or your business advisor will give you all the detail prior to that. So I want the takeaway from this page, I want you to know is that we could help financing startup and you don't have to put everything on your own. So the bank is actually happy to help you with that. Okay. And next page, please. Okay. So before you ring up the bank and book the appointment and speak to us, and you just need to let us know or ask yourself, like, what will this financing be used for? Like, I have clients who call me up, say, hey, Vigi, I want to borrow $100,000. Can you give that to me? And then I was like, what do you need that 100,000 for? Like, are you buying something? It's like, no, I just want to have it. I was like, no, you need to tell me the reason why you want this 100,000, right? So whether is it for a short-term financing, you need to buy your inventory, you need to buy a car, a truck, or something like that. Just give me something. So, and then is it a one-time expense? How much money do you require? Just let me know, like the minimum or the maximum amount that you're expecting, or and we will work together with you. And what kind of repayment schedule do you require? So regular or flexible repayment. So like most of the bank will give you the choice of like variable a variable term or a fixed term, or might have and allow you to pay 10% prepay every year or 0% prepay. So you just need to, like tell us the requirement that you want. And I find that the last one, I just put it out there because I have not have a lot of client ask me that either, because that one is the least important, I find, because once you know what you're looking for and things like that, all those are pretty much very flexible. You can just change it later on as well. Yeah. Okay. For the next one, based on the time, I'm just gonna go through. Okay. So this page, and I find that is quite important for you guys to take away there. So what you need to prepare when you apply for the credit. So in RBC, for anything it's less than 50,000, we don't normally require you a lot of documents, as long as you give us your driver's license or whatever, so that we could build a profile for you. We have your business profile, notice of article, and then the certificate of incorporation should show that you already have the business established. If this is a sole proprietorship business, we just need to see the registration page from the BC register. And all that, and then your statement of personal net worth, the bank will provide a document, PDF document for you to fill out, for example, to tell us what other bank account that you have outside of RBC. Do you own a real estate? Do you have any car? Do you have any ownership in any other business? Things like that. So we'll give you to fill out. That's about it. If you're borrowing anything more than 50,000 though, besides that, we will need to ask for your notice of assessment, personal tax documents, and T1 generals, okay? And then if you are borrowing the fund, let's say more than 50,000 or less than 50,000 for an existing business, we will need the detail of your any business debt, your financial statement for the last 2 years, which is very important, and then your list of all business assets. For example, like maybe RBC is not your main bank and you have other, like bank accounts elsewhere. And you can just let us know what kind of accounts that you have. Do you own like any investment outside? Do you own any properties under this business and things like that? Again, we will also give you the document and to fill out. And then we probably over a few phone calls and ask you all that. Now, if you are doing the financing for a startup company, which is very important, we will require a business plan unless that you have been with RBC for a few years, you have other business like the same type of similar business on profile. Then we could waive the business plan, because in that way, like for example, you are a restaurant owner, you own this sushi restaurant, that whatever restaurant, and now you wanted to tackle into some Italian cuisine or something like that. We would already assume that you have some restaurant, like running experience and things like that. Perhaps in that case, then we could waive the business plan and all that. But we will still need your financial projections, which from here, if you're borrowing anything less than 350,000, which is within the CSBFL, Canadian Small Business Financing Loan. We only require you to prepare 2 years of your opening balance sheet, and then your next year's of balance sheet, so 2 years projection, and then your income statement. We also need to you to have 2 years of projection as well.